So we're assuming that at some point in the next couple of weeks that the war ends. And both sides seem to want to get to a deal despite them being relatively far apart. What you're seeing so far is that there's no real negative impact on consumption. You're hearing across the board from companies, the credit card data, that spending is pretty solid. So
live cattle, a record high, that doesn't dent consumption?
There are parts of the inflation bucket that are elevated, right, but so far spending has been solid.
We turn to surveillance steakhouse correspondent Paul Sweeney. Where's your tip point on a steak menu item? Is it $70? You go, I'm not paying that.
No,
is it $90?
I think I represent the market. There isn't one. I don't eat it that often, but I will find myself in a steakhouse. I'm getting the New York strip. I'm not getting.
You don't have a price resistance point.
But I don't go that often. So to me, every time I walk into a steakhouse, it's a special event.
Thank God Lisa Mateo's not here. She hasn't had steak in 30 years.
I know, exactly.
Paul Sweeney with Stephanie Roth.
So Stephanie, where do you think we may see some of the spillover of now 7 weeks of war, higher energy costs? Will we see it in inflation? Will we see it in slower economic growth? Where do you think we'll see it, if anywhere?
Yeah, so far the March inflation data have been a bit lower than expected for a couple of reasons. Airfares haven't been quite as high as expected. They were still elevated, call it about 2% month on month. You've seen there's some other things that went the other direction, like legal services, which is sort of a one-off thing. Generally speaking, we do expect it to show up in the inflation data in the next couple months, specifically in airfares. That's the component that is most tied to energy prices that is part of core. But outside of that, it might take a long time for it to bleed into inflation. And if the economy is humming along, if the labor market is picking up a bit as we expect, then the economy should be fine. We're looking for 2.3% GDP growth.
And the consumer, are we in an economy here, again, the U.S. economy is roughly 70% services. Is the K-shaped economy such today that the higher part of the K is just driving the bus? It almost doesn't matter what's happening out there because we have the other part of the K, those folks are really struggling paycheck to paycheck, but we don't see it in the ultimate data points, do we?
No, you haven't. And you've seen just the middle to upper income people just sort of driving the economy. And it's a problem and a real world issue. But from an economic perspective, when you look at the macro data, you don't really see it because everybody else has been spending fairly well.
Stephanie Roth with us with a terrific synthesis with Wolfe Research of where we are. So the IMF puts out the Green Book. I saw it, folks. I re-linked in it. Guess what? I haven't read it yet. It's like 400 pages long. I need a beverage and vet bill sitting next to me. But in the Green Book, they say, OMG, the United States, their debt, their deficit, Treasury bill issuance. And yet everybody out on Lexington Avenue says, we don't care. So what is it? Does it matter?
It doesn't matter for now. At some point, there could be an issue where the bond market really starts to be upset about it. But we've seen a couple of periods of time where the bond market gets concerned about the deficit and then it kind of moves on because over the short term, generally speaking, it's economic conditions and Fed policy that tend to drive where the 10-year is. And by the way, the U.S. is different from the rest of the world because the U.S. is a reserve currency. So it has the ability to take on a higher deficit. I get it, but...
Okay, Paul, I know you want to jump in here. I got to go to this. I got to sell Barry Eichengreen. My book of the summer, folks, is Money and Borders. It's Barry Eichengreen of Berkeley, and it's exactly what Ms. Roth just said, which is our seigniorage, our having the U.S. dollar is absolutely fundamental. The strength of the dollar, the use of the dollar is truly foundational to your work.
Yeah, so what would happen in other countries? What tends to happen is if investors don't feel comfortable with the currency, they're gonna pull their money out, and then you get some big currency moves. But in the U.S., it's different because it's the reserve currency, so people continue to need to trade in the dollar. And in times where you really get risk off, money still comes into the dollar, which then puts downward pressure on rates and helps to offset that.
Paul, it's like your rock star seating at God's country.
Sure.
Okay, it's an exorbitant privilege. That's what you had. That's what Valerie just started to sing. He loved God's country. Paul,
here we go. So, all right, talk to us about the labor market. Are we still in a market where it's little to no hire, little to no fire, and we're just kind of stasis right here?
Yeah, it's been a slow labor market. Yep. This low fire, low hire environment seems to continue to be the case. We might see a bit of a pickup in hiring from here. We might see, call it around 70,000, which has been the most recent 3-month run rate. You might see a bit of a pickup in cyclical hiring. There seems to be less of an appreciation for the fact that tariff uncertainty did weigh on the labor market last year, and that is starting to fade. So our expectation is the labor market should be a bit better this year than it was in 2025.
If it's not really growing, the labor market, how does the economy grow? Do the existing workers just get more efficient, I guess? Maybe AI, I don't know.
Yeah, it's been a productivity cycle. That's been a key driver of growth, and that will probably continue to be. And productivity could be really strong in the next couple of years.
Right. Paul just asked folks the single smartest question of the quarter, the year, the decade, whatever. I mean, this is something on every American's mind. We're sort of leveling out with the immigration changes and all that. Productivity to the rescue. Okay, great. But does productivity help how many Americans? What portion of the people benefit from Stephanie Roth productivity? It's not 50%, is it?
Well, so here's how productivity ends up being a good thing for American consumers. It's generally speaking, it's initially good for companies because it helps their profit margins. They can hire less and produce more. But then eventually, at least in theory, then you end up having competition amongst companies. That drives down prices, and it allows real wages to rise, or wages can rise above inflation. And the people that are having trouble with affordability can kind of grow into some of the prices that exist today.
We are seeing wages growing, are we not?
We're seeing wages growing, but wages are growing faster than inflation, but we could see that play out even more. You tend not to have strong productivity cycles and inflation problems at the same time.
This is brilliant, Paul. Your question is beyond trenchant. This is unfair. It's not Cairo. It's Cairo, Illinois. It's like this wicked historic Civil War location at the tippy-tip bottom of Illinois. The unemployment rate there is 14.6%. Yeah. Now, I'm cherry-picking one of the worst economies in the country, to be fair, Alexander County in Cairo, Illinois. But, Steph, I got to be quick here. I mean, the dispersion of productivity is more narrow maybe than we think.
Yeah, it's possible, and eventually that could broaden out, and that would be a really positive development if it takes time. If it takes time, which it generally does, these productivity cycles, and there are pockets of the economy where, of course, unemployment rate is higher than others, but a little above 4% is a fine place to be.